Okay folks, we are in the second teaching of a series of 8 for the month of September 2016. And you've seen this before, but I just want to bring this up to you one more time. This is the market efficiency paradigm. And what this is depicting, or what I was trying to communicate by drawing it out, is we as new traders are collectively part of this larger whole over here of uninformed money. And whether we acknowledge it or whether we believe it, we will invariably come in contact with the understanding that there is a smart money group of traders out there. They're the ones that influence this entire mechanism that we call the markets. This small little group of traders is actually the drive shaft. And if this was a belt, like on a car, okay, like an alternator, this is the actual motor spinning the whole price higher or lower. It's not this big circle of people. So there has to be a paradigm shift. Now in the first video I gave you elements to a trade setup, and I gave you 2 characteristics to it. There's context and framework around the trade, and then obviously those refer back to institutional order flow. So you have to be able to bridge the two, understanding expansion, retracement, reversal, and consolidation, and applying them to respectively order blocks, fair value gaps, liquidity voids, liquidity pools, stop runs, and equilibrium. What does that mean for us, for instance, in the scope of price? How can we use these ideas and make them applicable to price? Now, I know some of you are chomping at the bit to learn long-term trading because you can't do day trading, but bear with us as we go through these first couple months, because I want to give you immediate feedback. And the way you get that is by using intraday study, because you get a lot of feedback in intraday action that is applicable to longer term charts. But I can't teach long-term long-term trading on daily chart inside of 12 months adequately. It can't be done because you're only looking at a scope of 1 year. But with intraday, it's like compressing years of data in just not even 365 days, really. 200 some days that we're going to be together. So let's look at the daily range. Suddenly expansion, retracement, reversal, and consolidation mean something. Every day starts with consolidation, Asian range. After midnight, there's a manipulation that takes place. That's expansion. It's coming in the form of a Judas swing. What is it doing? It's making the higher low in London. That's the London swing. For a reversal, that's a run on stops. Then there is another expansion move, okay, down into the New York session. Then there's going to be what? Another consolidation. That's the New York consolidation going into the 8 to 8:30 news embargo lift, where there's going to be another injection of liquidity or a reversal. Then there'll be another expansion, and then we go into London close, which is another reversal condition. And then what happens? The market goes in consolidation for the rest of the day. So we have a way of looking at these things and applying these concepts to time of the day and repeating characteristics. Now let's get back to the interbank price delivery algorithm. The daily range structure can be really broken down and simplified with, it starts with a price equilibrium. That's Asian range. Then there's a manipulation. And that's always going to come by way of some news event, some news driver, either at the time of the manipulation or just before it. That's the Judas swing. Then we'll see a range expansion. In other words, after the higher low is formed, the range will start expanding. It'll go down into 5 o'clock in the morning New York time, or go up into that time window, depending upon the daily direction. We're going to use the perspective that it's a buy day. That means that the Asian range had a small consolidation, and then right after midnight New York time, there's a drop down in price. That's the manipulation, making the false move for the low. There's a range expansion. Then it goes into the reversal. That's the classic London open scenario, where it shoots down, runs the stops, and then what happens? It expands again. There's another range expansion into what? 5 o'clock in the morning, New York time. Between 5 o'clock in the morning to 8 o'clock in the morning, in that time window, the market will go back into consolidation. Then it'll have a retracement between 8 o'clock and 8:30 in the morning, New York time. Then it'll have either a reversal in New York session or another expansion move. The range will expand and make the rest of the day, going up into 10 o'clock or 11 o'clock in the morning New York time, where it will have a reversal again. That's London close. Then the market will go into consolidation, ending true day at 1900 on Forex Ltd's platform. If you follow along with the videos we've been doing so far this month, you'll know exactly what I'm talking about. So we can see the interbank price delivery algorithm on a daily basis by studying these events and then seeing it over a period of time, you'll know what is most likely to happen. Now let's look at it a little bit further. If we're looking at price delivery, and this is the model that comes by way of my understanding of how the interbank feeds price to everyone. If we're focusing on delivery of price, we have to understand that it all starts with a consolidation. Nothing can happen until consolidation. Consolidation is when the market's quiet. Why? Why is that important? Because that's when the orders are building up in the marketplace. The market makers will allow orders to build up above and below the range. The next stage is always expansion. It's not consolidation to retracement. It can't retrace. It hasn't moved anywhere. It can't go consolidation reversal because it has to come out of the consolidation. So when you see a consolidation or holding pattern, you got to think the next leg is going to be in price. It's going to be an explosive move or an impulse leg. Impulse price swing. Movement. You need to see movement. By determining what that movement is and what direction it is relative to the conditions you're trading in, once we're in the expansion stage, okay, then you have a choice. It can retrace, come back to the order block it just left behind, and then recapitalize that and then make another leg up or down relative to the direction it's moved. Or once it's moved into expansion, it can reverse. Once it reverses, okay, there'll be another expansion, and then it goes back to a consolidation. The main thing is I want you to understand is it never goes consolidation retracement. It never does consolidation reversal. It's always consolidation expansion, and then from expansion it goes either retracement or reversal. It does not do consolidation expansion consolidation. That does not happen. It does a consolidation expansion, either retraces for another move into an order block and then recapitalize it and do the same direction it moved when it made it expansion, or it goes from expansion to reversal. When you understand this algorithm, the way it moves and the way it operates, it's very generic, it's very systematic. It has only a few options to go to, and they're time sensitive, they're day sensitive, okay? They're intermarket related. So when one market is moving real fast, if you understand the relationships like I'm going to teach you over a couple months, you'll know where the trade's setting up, because one's being held and the other one's letting it run, which is the importance of knowing what the euro pound's doing if we're trading fiber or cable. All these things are going to blend together, and you'll know exactly how I'm doing these things internally. And I'm doing it on the fly. I'm not measuring things and writing that down, making notes over here. I just know by looking at price what I should be seeing. And you see it. I'm thinking out loud in the videos when I'm doing the live sessions with you. All aiming at your better understanding of price delivery. And when you understand these things, when you get to the level of month 8 and month 9 in the mentorship, you're going to be so strong at knowing what the next thing's going to happen in price that you're studying. You'll know all these 4 things, okay? There's only certain processes that have to take place in a certain order. Like I said, it never goes consolidation reversal. It never does consolidation and retracement. It goes consolidation to an expansion move. There's an impulse leg, up or down. It's either going to retrace back down into where it just rallied up from, or it's going to rally back up into where it just dropped down from. The consolidation starts it all. They're going to run an expansion, and then once it expands, it's either going to come back and retrace and give it another leg up or down, or it's going to reverse. And then from the reversal, start applying time. The general structure is consolidation in Asia, expansion, reverse in London, make the higher low of the day, then expand. Small consolidation in New York, retrace between 8 o'clock and 8:30 in the morning New York time, another expansion move, reverse, back to consolidation. You understand price delivery then. You will not learn it just by what I just explained to you just there. But you'll use this as a model that repeats itself over and over and over again. When you have higher time frame directional premise understood, and then you look at this price delivery algo, it's so easy to know what the price is going to do. There's nothing more I can say about this video except for there's a process that you're going to learn that is very generic, and it will not break. It will not stop working. And when you look at the marketplace in your charts, I want you to think. It doesn't matter what time frame you're looking at. I'm just using the daily range to give you how easy it is to see on a repeating format. So simple. Every day you get an opportunity to study and see how it works. That same thing happens with a weekly range. The weekly range is the same thing. Sunday's open, consolidation. Then there's an expansion move in Monday. Then what? There's a reversal on Tuesday or Monday. And then what? There's another expansion move. Then it goes back into consolidation midweek. And then it's either going to do what? It's going to reverse or it's going to retrace. It's never doing consolidation retracement. It's never doing consolidation reversal. It's consolidation, expansion. Then from expansion, you're making a choice. It's either going to retrace back or it's going to reverse. Trust me, it seems like you still have a lot of choices to make, but it's not. And when you understand what you're looking at in terms of price, you'll know if it's really leading to a reversal or if it's really going to retrace and give you another opportunity to get in that another leg up or down that you saw in the first impulsive move. And believe me, you'll need to go back to this video, even though it's the second one. You'll come back to this video as we give more details along the lines of price delivery over the next couple months. Month 4 and 5, you'll still refer back to this one, and you'll see, there it is. It's been there all along. So with that, guys, I'm going to wish you good luck and good trading.